How's everybody doing? Been having a lot of questions on how I see, right, the double manipulation power of 3. And I've also, right, been getting a lot of questions where I learned it from. And it's not really a who I learned it from. Right, power of 3 is a pretty obvious, concept. But it's right understanding, time-based drawn liquidities and time-based ranges and right, just seeing the same patterns. Not patterns, but price signatures. Right, you could honestly call it patterns because it is the same thing happening, but it just doesn't look like a pattern, but it has the same narrative pattern. Right, we're going to get into a trade today that I took with a Wednesday daily profile expansion, understanding a 6 a.m. open, low, high close, along with inside of the 1 hour open, low, high close of the 8 a.m. and the 9 a.m. candle. The basics are just, right, every candle is an open, high, low, close, open, low, high, close. Every time frame, every day, every session, every single candle. Just simply understand the basics of textbook power of 3 models, such as an Asian session accumulation, a London session manipulation, with a New York distribution. That's not what we look at today, but this is a textbook, right, buy model and or sell model that happens a good majority of the time. We're going to keep in mind from our SMT video, the low time frame and the high time frame SMT, aligning all of our time frames and all of our models. Not all of our models, but all of our strategies, I guess you could call it. We're going to slow down because analysis paralysis is real, but right, with a narrative and with your narrative, it's going to be how you find perfection inside of turtle souping. You will see using time-based liquidity weekly profiles inside of daily daily profiles inside of weekly, that sessions will become more clear, which will lead to more clear understanding of catching a daily range inside of a weekly reversal. Coming from a risk to reward video as well, a daily range is over 800 ticks. We're using a 20 to 40 tick stop. Yes, ticks, right? Not points, ticks. Right. And we stop saying right. I'm so sorry, guys. Right. Good lord. Easily having a 60 RR, not full take profit, obviously. Not easily. But on the daily range days, it's pretty not the hardest thing in the world. Just being patient, letting it fall into your hands, and doing it over and over and over. Chart time is your key, almost. Right, and that's the real enigma, is chart time. We're going to pair power of 3 inside the hourly and the 4-hour candles. Use high time frame accumulations to find time-based reversals. This one was also an all-time high short, so I guess I'll add that in there with the trade I took today. But I'm going to go shortly over this one because it did fail, but for the, right, it hit take profit 1, which was like 1,600 ticks. We'll show it. You'll see it. It'll make sense, right? But we'll also show, right, why it failed and when it failed. We've showed why and when it failed plenty of times. We're going to visualize this concept and also look on your own chart for power of 3 models inside the tick 6 and 10 p.m. Asian candles with your 2 a.m. London candle into a 6 a.m. and 10 a.m. New York distribution candle. Right, we're going to also remember our Romeo 3 candle model, right, as well as, like CRT, market maker models, like our SMTs, right? It's all the same stuff inside, higher time frame to lower time frame. Let's get into the chart. I'm going to show you the first trade and then get into the all-time high short. So going over our trade with our double manipulation power of 3 and showing it off here. Right, obviously we're going to show our, obvious price structure and narrative along with time in an SMT, but we're also going to show our higher time frame double manipulation into lower time frame manipulation near the end, right, to get the full understanding of how I see it and how I try to understand it. Here's going to be our entry into our trade, right? We see here 7 contracts, right, with our sell limit at around like roughly 21,280. And right, we caught this in the Discord, right? We usually catch at least 2 or 3 of these a week. Last week was a little bit rusty, right? Friday we didn't catch much, but right, think we caught something Wednesday and Tuesday. So two out of 5 days of the week, right, with one break even day. And I think it was like, we hit a partial and break even, so it wasn't a big green day, but right, try our best to teach in there and give out trade ideas. I guess we kind of give out alerts, but right, all of that stuff's for free, and if you want to join, you can. It's always in the description. But we're gonna get into it here and right, show higher time frame where we were delivering from. Right, we've already talked about this with the higher time frame SMT delivering us higher, right, along with our higher time frame accumulation manipulation, distribution to this low, right, while higher time frame being inside the range, and right, also with our obvious price structures and right where we're delivering from and why, with this low being protected. Right, coming into the week, we did want to see it used as liquidity, but I mean, with this obvious market maker model, long wick to be filled to and through, and as well as coming into this day when we took the trade, it was very obvious, right, we were going to draw higher past this high and most likely distribute and spool past, right, our previous all-time high. The trade we were looking to catch was inside of this 6 a.m. manipulation candle, understanding the open, low, and the high close of it, closing green, and we particularly would like to see it close above the previous candle, but understanding we also had 10 a.m. news, right, with the 10 a.m. red folder, understanding that even if it didn't close above, right, the low is protected. Coming in, to give you different time frames of understandings, right, we have our 6-hour chart with our overnight highs and lows, right, with our open, low, high, close of our New York session candle. Coming in our 2-hour as well, right, we see an accumulation, manipulation, distribution, while all being right with inside of our candle wick range with our accumulation, manipulation below our lower time frame accumulation with our distribution higher, right, knowing our time-based liquidities and knowing that London high was going to be a target right after sweeping lower, and right with obvious bullish order flow and an obvious fair value gap below. Coming into the hourly time frame, right, it makes it a little bit more obvious coming into our 8 a.m. candle where we see our manipulation into our 9 right, reversal or either a continuation or expansion right into that 10 a.m. right, continuation right past our old high like we talked about. We're gonna right put some of the makeup on the chart. It's gonna look a little bit ugly if you don't know what you're looking at, but right, let's just kind of get past some of the first stuff. Right, we see our wick and our also failure to close right past EQ of it right with these candles, so we're going to take that off the chart and zoom in a little bit more to where we can see our hourly rejection block right with the 8 a.m. close, right with the protected 8 a.m. low. And not always is the 8 a.m. low protected, right, we can come in, soup it, right, but understanding right the news events for the day and right our daily profile as well, and expecting an expansion Wednesday, it makes sense that our low was protected then, and as well as sweeping our range low and having a higher time frame SMT here and with this low. Gonna zoom in a little bit more here. See our 15-minute chart with our London high coming right in at 4:45, so a little bit late, right with our 2 a.m. high. Right, so London really didn't cook up anything here, came a lot more in pre-market, and seeing our pre-market manipulation, right, even then, right, coming into right 6 a.m., we were still pretty close to our high and just created some long wicks that right accumulated liquidity above these highs, right, with low resistance liquidity here. We spooled down quickly after with the right with seeing our accumulation, manipulation, distribution, low time frame here. Right, how we talked about higher time frame staying within the range of the wick and or a body, in whichever case of, market structure you're seeing, and accumulating, manipulating, right, with order flow, right, we fade the low time frame manipulation, right? If we're bullish, we fade the bearish manipulation for a draw higher. Coming into the 5-minute here, we see our SMT as well as our protected low from our SMT time and our daily profile. We see our low that we swept here on the 5-minute, right? And as well as closing back within the range on the 5-minute and the 15-minute. Indicating, right, we could be close to our reversal, understanding why and where we're delivering from, right, our PDAs that we've set out, right, after sweeping, right, previous time-based liquidity at a certain time, right? And what I mean by that, right, are Asian highs and lows, right, London, as well as previous, like PM sessions, right, even like a New York AM session or lunch session, just understanding that time-based liquidity is very important. Coming down even to our 1-minute, we see after our final stab lower, we see a very enticing move higher, right, with a long wick being created. Long wicks in order flow get filled to and through, so we see, right, this wick got filled to and through, right, and created an order block here after our final down closure candle. We did close past 50% of the wick, but on the 1-minute, right, closures within, technical rejection blocks like that can't be as trusted as much as like 5 and 15 minutes. Right, even here we see how we talk about in our rejection block video. Failure to close on the 5-minute, failure to close on the 15-minute, and as we saw earlier, right, we didn't close even anywhere down here, right? We reacted. We'll actually mark it out. Show the 1-hour rejection block with the wick. See how we reacted to it within our. And after 9, or excuse me, after 9, right, we see our lower time frame accumulation, manipulation, distribution with understanding, right, coming in before 9:30. Right, we want to see some type of manipulation or anticipated failure swing and then deliver higher. Right, so we also did have a lower time frame SMT, right, with this candle here on the 1-minute and, right, the bodies on the 5 and the 15-minute. Understanding, right, this is our protected low, right after we sweep the range and coming into our hourly candle. A lot of people, right, would get nervous and get scared here, maybe, right, go break even or something like that. But we held through. I got in like right here, right at this order block, stop below the low. So that's going to be like a, right, 16 or 15 tick stop on that, right, and then, let that puppy ride all the way to the highs. Understanding coming in before 8 a.m. or excuse me, 9:30. We would like to see. Honestly, open looks a little bit trash here, but there was no reason for it to, right, manipulate lower time frame. We just had our distribution for our open, so there was no technical Judas swing. We had our pre-market manipulation, so there's no reason for, right, a lower time frame Judas swing because we're already so close to our low and delivering from an SMT inside our higher time frame SMT. If right, it did look a little bit different. Say we kept delivering here and we started accumulating. Then that would make sense if we accumulated, manipulated with right, 9:30 open, right, then to deliver us higher. But right, due to time and price aligning, right, there was no reason for our 9:30 candle to open, right, and then drop super low, right, and then deliver higher because we've had our protected low put in, right, and started to show signs of bullish delivery that we look for in our turtle soup sequence. And I show all that lower time frame to, right, put that idea in your head of the higher time frame accumulation, right, manipulation above your lower time frame high, and we didn't close above the wick right here. We did have an SMT, so a lot, right, so it did make sense for us to deliver lower, but higher time frame are bullish, right, have the higher time frame fair value gap, have our rejection block model 2 inside model 3, inside model 1 with clear market maker models, and right power of 3 aligning and making sense inside of our hourly and 4-hour candles. This also aligns with our higher time frame accumulation, right, manipulation, distribution, understanding that we've just still accumulated with inside the higher time frame range, or inside the higher time frame range, right, and accumulated orders above the high, manipulated pre-market for us then to deliver, then to deliver and distribute, right, way above the high. And also show the trade, to show you that it's not hindsight and it's, right, just understanding, right, good price delivery and when and where we can get in before the market, right, or when the market reverses, and, be able to hold trades, right? And we see our TP hit, forgot what it was, 21,280. This might be a different chart. Let's see where it was. Oh, 20,280. Right, yeah, and that probably was high. Yeah, 280. Yeah, and that easily smack take profit. Not even a red candle, right, with a volume imbalance there. We probably hit it and then open high or closed. But right, easy take profit there. Wednesday expansion day. So we come in, right, catch the low a day and are able to trade or hold the whole trade, right, for a good long period of time. Another quick case study here. I know and understand it failed, right? We've talked about this delivery price range, or right, this delivery from this price range a million times. So, right, the higher time frame delivery makes sense, right? And I wasn't paying attention, but right, we did hit, right, we took profits here, and then also should have took profits here, right below the low with the line I marked out. Right, it's just a swing trade that, it doesn't really matter. But gonna get into the right trade idea, right, is seeing that the wicks tell the story and the bodies do the damage. This is all-time highs, right? We're, millions of miles above our last all-time highs, a good while ago, so we're just still delivering higher. So it's, how did you pick a short inside of the wick, right, all the way up here? It's understanding our 6 and 10 p.m. candles, right? We did short once in here, and that's what you saw on the thing and failed. So I understood where I went wrong, right? And then waited until the London session truly, not, told me that it wanted to short right with the closure of the 4-hour, because one, I wasn't waiting for that, and two, I was pretty confident in the short already, right? And that being with this this candle, right, and this candle as well, but this one for, visualization of your one. God, that's a terrible one, but right, that's your number 1, and this is your number 2 candle, and this is your number 3 with this one, and then number 2, and we close back within the range, okay, and we see also, right, our accumulation range here of our candle bodies, and we keep closing within the range, also not breaking any highs or lows. We did break the low here and delivered higher, right, with an accumulation, manipulation, distribution. No high broken here, so liquidity gained, equal highs, easy draw on liquidity, easy CRT, right? Excuse me, quit saying right. I'm so sorry. I'll fix it and be better for you guys one day, but right now I'm just terrible. Gonna delete all the marks off the chart and visualize that concept with our Asian manipulation into our London manipulation. Yeah, with our Asian accumulation, London manipulation into our 6 a.m. reversal distribution into our 10 a.m. continuation. Understanding, right, we had liquidity above and below, sweeping one side, delivering the other. High time frame we're bullish, as we've seen, right, delivering plenty of times. Also from here, and we've talked about plenty of trades, even this trade that we took in the video. And then this was our previous all-time high. Also another expectation of anticipating, right, an IFEG before it even happens. Another way to hopefully see if you can visualize this is coming in from our previous day. We put in no real manipulation lower to then drive higher. We did put this in Tuesday, but look at our Wednesday accumulation, and then this is into a Wednesday, that's PM, which is our Thursday Asian session or whatnot, it's our Wednesday night, so it's technically Thursday. It's Thursday's trading day. You guys know what I mean. So it's we have a whole day of accumulation and no real manipulation below the range, an accumulation of price into manipulation into a distribution. That's probably a daily CRT as well. I guess technically with an inside range, and then we deliver, but I mean technically, right? Wouldn't it be? I could be wrong on that, but it's pretty ugly. But anyway, not really so much worried about CRT because if you've been in some of the lectures or teachings that we've had before, we just spot CRT within these just time-based liquidity candles with time-based ranges, and it's pretty simple to understand that and then see it and then be able to capitalize it. And it's not like I only took I took this on my live account as well, and then shorted and held some, and didn't hold the whole day. But to be honest with you, Apex is killing me on the consistency rule. It's ridiculous. They're killing me in a couple places, but it's all right. That's an expectation of being a prop firm trader, and I'm not gonna give you guys that lecture at the end of the video here. It's just what happens and how it is sometimes. We're gonna go ahead and actually, it's the end of the video. I'm sorry, I've already recorded this part, but yeah, I hope y'all enjoyed and hope y'all learned a little bit, and hope y'all can add this into everything else, with the market maker models with an accumulation, smart money reversal with the SMT into an accumulation, even here, accumulation, manipulation, distribution, all while being an accumulation within sort of our range and our kiss of death before we delivered higher. Well, actually, this was our kiss of death that we caught, and you saw that trade a little bit earlier, but kiss of death before this, but it's the high time frame market, whatever you want to see, our final manipulation leg before this high, and then our another final manipulation leg before this high. However you want to look at it, it's all the same stuff. But yeah, and then you can even see your accumulation, accumulation, manipulation, distribution, and then accumulation, manipulation, distribution, same stuff over and over again, accumulation range, smart money reversal here, delivering from our higher time frame order block, which is an anticipated failure swing, with low resistance liquidity, just to deliver us higher. Gotta go lower to go higher. End of the video, yep, whatever. Y'all have a great one. See you later.